Hello to all traders and welcome to the final stock watch of the trading week. So we're keeping an eye on the dollar index at the moment and dollar currencies in general as they're hitting decade highs at the moment. The DXY not only punctured the $100 handle, but it's actually now trading above $103, which we'll check the charts shortly. And this is the first time since 2002, so over 2 decades at the moment. So the main catalyst for this was the Federal Reserve's stance on its monetary policy easing. However, the Bank of Japan, the Bank of England, and the European Central Bank are all deciding in the next week or so if they're going to actually start hiking rates as well. The probability is that the European Central Bank and the Bank of England will do so. However, they'll do it gradually rather than the Fed, which is supposedly going for 5 interest rate hikes this year alone. So we'll see how detrimental that is. And we can't look at the dollar index without looking at the euro dollar, one of the most popular forex pairs traded on the market, and we'll see if there's parity coming. Apparently on traders' lips, it reached roughly about the 100 or 1.05 level yesterday. However, we are now looking like it will start moving lower, and we saw these low levels a few years ago when it actually reached 1.03. However, will it actually get any further down than that? So the next couple of weeks will be very, very vital for the dollar. As I said, we've got the Bank of England's interest rate decision coming up as well, and a few other central banks in the process as well. So let's just take a look on the dollar index at the moment. I just wanted to emphasize the last time it hit these levels. The chart is a bit zoomed out, but I just wanted to show you that, from 2002, we saw a potential spike around this particular area, 2017, then another one, but now we have had a confirmation. And if we just zoom in, just put it on the daily chart so it's easier to see, easier to comprehend. As you can see here, the vast ascension in prices since we had the start of the pandemic, where we saw these new fresh lows going all the way down to 90, piercing the 90 level. And now, as you can see, bets were firmly made that the dollar index would actually recover on what the Federal Reserve Fed Chair Jerome Powell did say. It is a recovering economy, so we'll see how vastly that is at the moment. So as you can see here, the probability is that we are going to start pushing higher. We've had a start to the day here with a red candle, which could mean there is a bit of a retracement, but we are looking at this kind of impulse 1, 2, 3, 4, and 5. So we are looking now that wave 3 has completed. We're going down to wave 4, and now we're going to move up into wave 5 for this impulse leg. If we look on the 4-hour chart as well, as you can see here, I'll just move these drawings so it's a bit easier to comprehend. As you can see here, we are looking at prices are trading vastly away from the Ichimoku top border, which gives a good indication that prices will still keep pushing higher even after this slight correction in prices here. And then we're going to move up to the next leg to the upside. As far as divergences go on the RSI, there aren't really many because it is very, very overbought here. We were expecting a come down, which has happened, and now possibly another leg to the upside. So just watch out for that for the dollar index at least. And as I said, we can't look at the dollar index without looking at the euro dollar. And again, as you can see here, we'll just put it back to the daily chart. Now the vast dissension in prices, just move a few things so it's a bit easy to see. The vast dissension in prices, as you can see, from the beginning of last year, and even when the pandemic struck, we had this recovery in the eurozone that was very, very buoyant, and Europe was getting back on track, but the dollar has actually started fading by then. But now, as you can see here, this vast dissension on the euro, the dollar is actually starting to make its way back. And as I said, we haven't really seen these levels since it hit 103 in December of 2016, and then we saw a push to the upside. But as you can see here, very, very choppy if you think about it in the overall vast cycle leg. But as you can see here, it could start lowering to these levels that we've seen not so long ago for the euro dollar. And this will be very, very detrimental for Europe in general, because the dollar seems to be getting back on track, and we'll see what the outcome is. Just looking on the 4-hour chart quickly, just so that all our bases are covered. As you can see here, with the assistance of the Ichimoku cloud, we are looking now that prices are going to start possibly recovering like the DXY index, a bit of a role reversal with having this leg down, a slight correction, and then another leg lower. So I'm looking at this 104 target first of all, which would be a very big psychological level, and then possibly a move down to 103 by the end of next week. We've got the FOMC minutes next week, we've got the Bank of England's interest rate decision next week, plus a host of other big top stories such as the non-farm payrolls as well. So we'll see what is in store. Very big news events next week that could shift the dollar either in the same momentum, or we could have a bit of a turnaround. So very exciting times, and we'll wait and see what's going to happen. So from all of us here at Orbex, thank you very much for joining us for another edition of Stockwatch, and we'll see you next week. Bye for now.